Hi guys, Alan Jackson here, the social accountant and founder of My Tax Book. Welcome to today's video, Tax 101 Part 1. And today we're just going to start off with just getting a basic foundation around our tax system and more and off around tax deductions, as that seems to be the most popular discussion about what we can claim, how much tax we'll get back. So let's hop straight into it. A tax deduction doesn't always automatically entitle you to a tax refund. We'll elaborate on this as we go. $100 spent does not equal $100 tax back. The ATO does not reimburse your expenses. You generally need to have paid some tax in order to get some back. That may shock some people, but it always makes me laugh when people want to get some tax back but they haven't paid any. Anyway, so what is a tax deduction? A tax deduction is an expense that is related to you earning your income. It reduces your income that you pay tax on. And here's the ATO's criteria around what a tax deduction. First one is it must be spent. How about that? So we can't just make up in our imagination that we've spent all this money. It must have actually been spent. And two, it must be an expense incurred in earning your income. So here we've got a basic formula, tax formula, or make it fairly simple. So you take your income, which could be from wages, you might be a contractor, so all your income, less deductions relating to earning all that income equals taxable income. So this is the income that you will pay tax on. So basically when you spend money to assist you in earning income, then it will be a tax deduction. Emphasis here on earning income part of the equation. So you have to show that the expense was directly related to you earning that income. Now, how to calculate how much tax you will save based on your deductions. Your tax savings based on your deductions will vary depending on your tax bracket. Firstly, determine which tax bracket you're in, and we've got a PDF document below this video that you can download, and we're just going to go through the current tax brackets so you can get an idea. And what you'll do is, once you know what tax bracket you're in, you'll multiply your expenses by that percentage and you'll add Medicare levy. Anyway, here are the current tax brackets. 0 to 6,000 you won't pay any tax. 6,001 to 37,000 is 15%. 37,000 to 80,000 will be 30%. 80,000 to 180 will be 37%. And anything above 180,000 is 45%. The above rates do not include Medicare levy, so you've got to add 1.5% to all of those. So the first tax rate bracket of 15% is actually 16.5. Now, just a tip just here is a lot of people get confused here. If they get to a point where they earn over, say, $180,000, that they think all their income is taxed at 45%. It's only the amount above that tax bracket. So only the amounts above 180,000 get taxed at 45%. Same with if you get over 80,000, only the amount over 80,000 will be taxed at 37%. And that's why people shy away from second jobs, because they think they're going to be all completely taxed at a higher rate. So tax deduction will reduce the amount of tax you will pay on your taxable income. Now, I hear a lot of people say, I didn't get much back based on my deductions. Now, you still get the benefit of the expense reducing the amount of tax you pay. Your refund, however, will depend on how you are taxed. So let me just explain that. So in some cases, people don't have enough tax withheld from their wages or other income. So it depends. Sometimes you may be on wages and the employer may not have deducted enough tax, or you might be a contractor where you don't have tax deducted out regularly. So here's a simple example. If you had income of $50,000 and you had expenses of $5,000, your taxable income then would be $45,000. Now the tax on this is $7,000. So $7,000 tax on $45,000, which is your taxable income. Now the tax on $50,000, which you originally earned, is $8,500. So your expenses reduce your tax payable by $1,500. As you can see, the difference in the tax on $50,000 opposed to $45,000 is $1,500. And if you want to calculate that, you take your deductions of $5,000 and multiply it by the 30% tax bracket you're in. Now your refund will depend again on how you were taxed. So for example, if you had no tax taken out of your $50,000, well, you'll have $7,000 tax to pay on the 45. However, the deduction still has reduced your tax payable by $1,500. Just because you didn't get a refund, you're still getting the benefit. Now, once your income falls below the tax-free threshold, there is no tax benefit from additional expenses to reduce this income further. Now, we're going to discuss this a little bit further in video 2, so more on tax-free thresholds. Expenses that are only partly work-related, you will need to calculate the private portion and only claim the percentage that's related to work. Now finally, last word on deductions here. You've got to ask yourself, how can this expense legitimately relate to my income? If you're not sure, make a note, then ask your accountant at the end of the year. You can ring the ATO or you can post a question under this video. And again, I'll just finish off there that please post any comments or questions or suggestions under the video if you would like. So just in summary, if you've got any tax deductions relating to your earning your income, you multiply that by your current tax bracket. So again, if you had $1,000 worth of work-related expense deductions, multiply that by your tax rate. Now the tax bracket most common is 30 cents in the dollar, so 30% of $1,000 would be $300. That would reduce your tax by $300. Again, wouldn't necessarily mean you'd get $300 refund. So that's it for today. Thanks for watching, and we'll see you in another video soon.